course.
Let's get more on our main story, the concerns that the recovery could slow down with house prices falling for the first time in a year. That's according to the monthly survey by the Royal Institution of Chartered Surveyors.
Well, I'm pleased to say that James Caan, one of the Dragon's Den investors, is here with us this morning. Thanks very much for coming in. How concerned do you think we should be by this house prices, the figures coming through? Is that indicative of a wider problem, do you think, and the dreaded double dip that everyone's talking about?
I think the house price figures that came out this morning are really establishing a bit of a trend. So I don't think it's just the house prices. If you look at the retail sales index that's showing actually the growth is slowing, you've got the economy generally that I think is really fragile. And I think the fear of a double-dip recession, I think, has been going on for nearly 6 months. And I think this is the first specific sign that we've seen, the indicator that says the likelihood of that happening is actually greater right now than it probably has been for the last few months.
And it seems quite concerning, doesn't it, that the wider picture, as it comes about commodity prices and so on, we're hearing that wheat prices and things may skyrocket, meaning that bread and biscuits, beer, everything is going to go up. We're going to be spending more, and yet we're also going to be earning less. We're hearing so much about people's pay being frozen and so on, and we may have less generous sort of pension provision and so on. This combination of us needing to spend more and less money coming in is pretty dangerous.
I mean, I think the message really that we're saying is I think people have to be more prudent right now. There is a great deal of uncertainty, and I think it's uncertainty that creates most of these problems. And I think right now, although I think the stock market actually has done better than anybody expected, but I think, remember, you know, September, October historically have always been extremely dangerous months in the stock market. And I think that is going to be probably the catalyst that will illustrate whether or not we're heading for a double-dip recession. So certainly for me right now, I'm going to be extremely careful and monitoring that situation. And I think, you know, I mean, I've got quite a large equity portfolio, which, you know, my instinct right now is telling me while the market's pretty good, I ought to sell out now and not gamble and hold on until September, October, because, you know, most of the crashes we've seen historically, for some reason, always happen around that period. So I think that's the thing that I personally right now, I'm extremely cautious of.
The other issue for people, though, is when they say they're going to be prudent and cautious, is that they might want to save. And, of course, interest rates are at this all-time low. It seems they haven't changed for so long. And the Bank of England looking at this constantly, of course, worrying about the interplay between inflation and interest rates. What would you like to see happen with interest rates?
I mean, I think the economy really is too fragile to see interest rates rise at the moment. I think that's one of the reasons why I think historically this is one of the longest periods where we've seen no movement on interest rates. And I think that is absolutely the right thing to do. If you put up interest rates right now, I think the risk of actually going into another recession is much greater, which is why I think we haven't done that. So I think from the economy's perspective, I think it's right to keep interest rates lower. I think from the saver's point of view, clearly it is not attractive. 0.5%, if you're lucky, is not great. But personally, I'd rather see 0.5% and keep my money safe than to be risking right now. This is not an environment, I think, where people need to take unnecessary risks.
Now, another area you're hugely familiar with and experienced with is people starting out in business, people trying to be entrepreneurial, and of course the government talking a lot about the need to get money coming into the economy. They want businesses to be doing well, small businesses particularly, and yet we're hearing time and time again from people like the Federation of Small Businesses that the money is not there to be had, that lending is not as they would like to see it from the banks. Is that your experience from people you're dealing with?
But you know, that's why we have Dragon's Den, because where the banks fail, we can always rely on Dragon's Den.
But only a small number of people are going to get their chance.
You know, since the programme started, we've actually invested in 160 businesses. I mean, that's a huge number. But you're right, generally right now, from a macro perspective, you know, the banks are not lending. But I think, you know, and I'm not there to defend the banks, but the reality of the situation is, if you go to a bank right now, we're very fragile with the economy. Businesses are finding it really difficult. Revenues for most small businesses are really tough at the moment. So if you are a business that goes to a bank to borrow money and you're not making any money, you're losing money, you know, it's a much greater risk. And, you know, remember, it was only a few years ago we were criticising the banks for being reckless, for lending without thinking, and now we're criticising because in a very difficult marketplace, it's very hard for them. Their credit committees are looking at the balance sheets of the businesses that are looking to raise money, and they are really, really difficult. So I think it is hard, and all I can say is if you've got a great idea, Dragon's Den, come and pitch me.
And you're there with your chequebook ready.
I'm there, willing and able.
Talking about chequebooks, of course, background against all of this, we're hearing foreign news, these dreadful floods in Pakistan, which are causing so much problem. And, of course, you're the chairman of the British Pakistan Foundation. It's an interest of yours. The worry, of course, is in hard times is that however generous the British people want to be, they hesitate because they've got problems here. But you would be making the case to say Pakistan is having a very difficult time. Please think about finding some money if you can.
No, I would, and I tell you why I say that is because this particular disaster is bigger than the tsunami, the Haiti earthquake and the Kashmir earthquake put together. And just to put it into context, this particular issue with the floods have affected 13 million people. That is huge. At any level, it is a massive disaster. And I think when you're talking about raising money, just to, again, give an example, in the Kashmir earthquake, you know, they raised £6 billion, you know, to kind of deal with some of the issues that they were facing. In the current floods, we've only raised £6 million. I mean, that is not even a fraction with so many people affected. So what I'm doing as chairman of the British Pakistan Foundation is I've essentially tied up with UNICEF because they are one of the organisations that have been on the ground for nearly 60 years. They know the infrastructure really well, and I'm really committed to working with them to try and raise awareness but also raise funds, because literally for £45 we can vaccinate 30 children. And right now, because of the diseases that are being essentially created by the floods there, I think we're going to lose probably the lives of tens of thousands of people. So I think anybody that can help right now, this is such a critical issue, to really go on to the UNICEF website, which is www.unicef.org.uk/BPF. And I think anything that you can do right now, there are literally people, somebody, I think one of the interviews I saw on BBC yesterday, one of the families was saying that it was a miracle that they'd been saved by the, you know, from the floods, but yet actually they're probably going to die because we just can't get water to them. So on the one hand, you know, the people who have survived, we're saying they've done well, but actually we can't get basic vaccination, basic food. 1.5 million children, you know, are currently in danger from malnutrition. I mean, the issue is absolutely devastating.
And in terms of the Pakistani community over here, how concerned do you think people are? Because presumably a lot of people will still have links back to that area, particularly the northwest.
I think they are more concerned than we think, actually, because you're right, because it's affected so many people at such a vast scale. Everybody here in Britain has somebody or other, or family or people they know, that literally have either lost their homes. I mean, one of the reports yesterday, just in one village alone, 500 schools have been wiped out, 600 bridges had been destroyed, 580 government buildings had been completely, you know, destroyed through the flooding. So it actually is such a big issue. And what concerns me is the Pakistan economy before the floods was really, you know, incredibly fragile at best. They've just come out of the Kashmir earthquake. Most of their resources were really focused on that. And now to be faced with this, they just don't have the financial means. So I think unless the international community really comes together, I think you're going to see probably one of the biggest disasters in Pakistan's history.
OK. James Caan, many thanks for your time
this
morning.
All headlines coming up in just a couple of minutes. First, the weather, and it's Jay Wynn. Jay, good morning.
Thank you, Simon. Good morning. A real mixed bag of weather across the United Kingdom.